Thank you for the introduction, Marcel, and yeah, thank you everybody for still being with us. I think it's already very late. I saw that you could already get wine, some wine outside and some beer, I guess. So thank you for still being with us. And yeah, but at least I've heard the food will only be delivered in half an hour, but not sure about that. So. We have the topic of ecosystems and digital assets. And so the first thought that came to my mind was, from which ecosystems are we talking? So from my point of view, we should kind of start with a definition. And as far as I know, you're all working in very different kind of ecosystems. So, and of course, let's start with a short introduction, and then maybe let's do it that way. Just start with the introduction, and then we go down to the ecosystems. So, yeah, maybe.
Hello, Jens is my name. Welcome to the night shift. And I head the Web3 and digital assets team at Deloitte in Germany.
Hi, my name is Enno Henke, and thank everyone for still being with us. I'm the co-founder and co-CEO of Hardstocks. We are the first company to bring equity as a structuring vehicle on the blockchain, and now we try to revolutionize the market of alternative investments using our DLT-based investment approach.
Hello everyone, I'm Andy Fleury, I'm founder and CEO at Widen, previously AlgoTrader. We're a tech provider, tech vendor. We assist mainly banks in serving crypto and digital assets to their clients.
Hi, I'm Philip. I'm the co-founder and CEO of LeFi. We are around 40 people aggregating core DeFi infrastructure. It's a DeFi asset gateway for traditional finance. We are being used by MetaMask and the largest wallets in the space in general. And yeah, are funded by companies like Coinbase, Circle, and Temasek.
Thank you. So Jens, maybe we can start with you. So Deloitte is broad consultancy, sometimes focusing on banks as well. So maybe you can start with, who are your customers? What are you doing? What is your ecosystem? How do you experience everything that's happening, especially at the moment? I mean, your banking ecosystem or the banking ecosystem is quite difficult. So maybe we can start with some information on that.
Sure, stop me so it keeps being a panel. Who are our customers? Who is not? I mean, that sounds bold, but that's actually true. It's from automotive, it's banking, it's startups. It's we just came from a call with a charity who is trying to accept crypto donations. So it's really a broad picture there, and this is also why it's hard to say who is our ecosystem. So we do have our own ecosystem, which is partly build of our clients and client solutions that we can bring to clients, but it's also a lot of what we've heard today, because what we see here, there are no large, massive players yet in the market, why we just heard that we see some consolidation, and we also see with FTX and Binance and other news in the market that there might be new consolidations and then market shifts. Who knows? So it's definitely going to be changing, but it's really important also for me. I mean, who shouldn't look at this market? And everybody who has an asset, and that's basically every company, has some sort of stake in this place, and should consider whether or not it makes sense to be part of that ecosystem and play a role in a large network of companies that work together.
Okay, so basically, like every company could potentially be your customer.
Every company, but not every use case is a useful one.
Okay, I understand, but you need to have a lot of knowledge to be able to really deal with all those questions. But yeah, maybe let's go through the line a little. So I know you're doing tokenization of real-world assets. So maybe you can just let us know about your ecosystem, because I think that's totally different from the consulting business.
Yes, I would love to. So for us, it was quite difficult to build up an ecosystem because we had to look at two different sides. The first side was the regulatory approach, and the other side was the technical approach, and we needed to combine them to fulfill our wish to bring in a holistic product on the blockchain. And so on the financial side and regulatory side, we tried to combine everything we needed in terms of regulation, trustability, credibility, and everything else. So we combined a network and ecosystem out of banks and try to regulate that in a full holistic way. And on the other hand, our headquarter and we are based in Liechtenstein because the regulatory approach there is that we are only allowed to bring equity on the blockchain. And so we had to combine also two legislations and regulatory approaches into our product to have in the end the first blockchain-based equity product that we can offer to clients in Germany. And so there are two different ways our ecosystem and our infrastructure is combined and works together right now.
Okay, thank you. I think especially regarding tokenizations, there are many things ongoing at the moment, but maybe we can deepen the discussion a little later. So, Andy, you have been totally different ecosystem again. So maybe what are your thoughts? What are your customers? What are your experiences at the moment?
Yeah, we kind of started with one ecosystem. Now we ended up in a completely different one. I have a hedge fund background, and originally, of the first few years of our company, we mainly served hedge funds, small, mid-sized hedge funds. You know, typically 5 to 10 people, you know, below 1 million AUM. Over the last maybe 3 or 4 years, we kind of shifted gears and are now primarily serving banks across the globe. And that's a completely different story. You know, we're a tech provider, so the focus was always on tech. And now with banks, we provide, you know, 24/7 service under a SaaS model. We fall under outsourcing, BaFin outsourcing regulation. And that then becomes a very paper-heavy business model, right? It's not so much, obviously, the tech you need to solve, but there's a lot of other disciplines you need to cover as well. So that was quite an experience for us dealing first with the buy side and now with the sell side.
Okay, understand. So last ecosystem, multi-chain liquidity aggregation. So Philip, it's your turn.
Yeah, we are probably the deepest in the stack. So essentially, we have aggregated all the DEX aggregators on each chain. So access to all the exchanges, no matter which chain they are on. And we have aggregated the bridges, the cross-chain bridges in between that would allow us to bridge assets from one ecosystem to the other one. So we are relevant for anyone who wants to touch assets outside Bitcoin and Ethereum. Just to give 2 examples what that means. For a custodian, it's very important to keep their AUM, like asset under management or AUC, as high as possible. So but the customers becoming more and more intrigued to leave custody in order to interact with DeFi. So if they could allow swapping out of custody and bridge out of custody and coming back in one circuit, then they would allow certain asset exposure to their customers, but they can offer all of that out of the box. And we provide that one API for it. So essentially, we started the first 2 years just serving DeFi protocols who wanted to simplify user onboarding, since what we saw over the past 2 years was a strong fragmentation of infrastructure and liquidity. So suddenly, the user journey became much more cumbersome. So we helped them to simplify that. Now we are shifting more towards TradFi, and on-ramps, wallets, custodians are the first ones, but hedge funds, those who have liquid funds within DeFi are next.
Okay, on which chains are you active?
Right now on around 20 EVM chains, like from Polygon, Arbitrum, Optimism, Ethereum, all the bigger names, but also expanding towards Solana and the Cosmos ecosystem within the next 2 months.
Okay, so what about Wyden? Is it like similar that you're working on many different chains, or are you kind of focusing on?
It's a little bit different story. We're not connected to chains directly. We trade, you know, through exchanges, through brokers, market makers. So we also offer lots of connections, but you know, it's typically we have about 50, 55 connectors we offer. Then there is the custody layer. We integrate with the main custody providers out there. So there is usually your link to the on-chain world, and then there is the third dimension, which is core banking system. So we work with you know, the 3 kind of largest core banking system providers. So there's a lot of connectors, but not on-chain connections.
Okay, thank you. So because the topic was like what makes the ecosystem successful, so maybe we can like talk a little about what are the problems on the one side and what is needed to be really successful in your kind of businesses. And yeah, Enno, do you want to start?
For us, it's quite important that the big players right now will stronger move into the market, because we are quite dependent as a young startup who produces financial products on the big players, because they bring the reputation, they bring the safetiness that you need in the market right now. And there are a lot of startups that try to do, like, for example, custody business and everything else, but they are quite limited. And if you want to move to the institutional markets, you need the big names and big players to evolve and also offer opportunities that you can build products on the infrastructure of the big names and big players they're already working with. And also you need more players in the market, because the players we have right now are quite only a few, and they are very not price takers but price makers. And in the end you have to try to make a product as cheap as possible in the same situation as you make it as secure as possible. And this is quite complicated if you only have a few players that offer a service you need to have in your product. So I would say, in the first place, big players move in the market, more players move in the market, and more, moving on the market and a better price mechanisms, so that you are able to offer products that they really not only are safe and secure, but also are cheap.
So, but then you're saying, as far as I got you right, you're also getting a lot of competitors in the market now, right?
There are a lot of startups that do tokenization right now with different approaches, different assets. We are the first ones that can offer equity, a structure vehicle, as in a fully regulated way. And I would say there are a lot of other companies moving into that market, that's right. But what we don't see is a lot of big institutional players that move into that field. For example, it was quite a big headline a few weeks ago that Siemens launched the 60 million product, and it was quite amazing for every one of us, because we saw that institutions try to use the DLT-based products for their own ecosystem, and that's quite good for the market, but there are only very, very few big players moving into that field, and also just a few infrastructure providers, for example, DZ Bank, or some else that move into that field with good products and products they can offer to all the clients on the market. So there is concurrence, but there is also like a slow and steady movement of the institutional players.
So maybe let's stick with that topic for one more question or one more moment, because I see many startups, as you already said, in the area of tokenization. But from my point of view, I think it's not necessary that there are so many startups in that area. And I'm always wondering, how do they differ and which of them will really survive? So maybe what are your thoughts on that? Because sometimes it's okay, it seems pretty similar what they are doing. And what are your thoughts on that?
I would say the market or the possibilities of tokenization are quite huge. There are so many different approaches. For example, what we see over the last few years, a month, is there is a big movement into the ecological field with, for example, CO2 certificates. They're quite different. It's a quite different approach, because the on-chain movements of the tokenization does something quite differently to our approach. For example, we try to make financial products more efficient, and they just try to do something completely else. So the horizon of opportunities is very large, and I think in the end only the companies with a very strong approach, a good and high quality product, a high security, and a clear benefit in comparison what was accessible before on the market will stay. And there will be a lot of companies trying, and only a few of them will succeed.
Okay. Yeah, please.
If I might add to your question, I would agree to a certain extent, but then disagree on the other one.
Happy about disagreement, so please go ahead.
Because it might look like similar products, but in the end, and looking also from our ecosystem, we look for partners, or our client look for partners, either partners or maybe even targets. It depends a little. But then it comes not only to the product itself, it comes to the team, it comes to the regulation, it comes to how DevOps are set up, how are security solutions, how are they linked, is there already insurance in place? So if you look at those very detailed questions, they differ a lot.
And that means that, of course, some of them really good with handling all the questions, and some others will fail for sure?
that's how the
Works.
market works, and so I'd say yes.
Can I add one point as well, maybe a bit controversial? When it comes to tokenization, I think we almost have too much tokenization already. What we are missing is marketplaces. You know, so many assets have been tokenized, but what then? You cannot do anything. You cannot trade them. So I've been waiting literally for years for secondary marketplaces, and they're still not here. We have the technical capabilities. The regulation is there. In Switzerland, it's been for 2 years. MiCA will put the foundation also in Europe. So we need to hurry up. You know, otherwise, tokenization is going to be a dead end.
Maybe something to that, like because we are down the DeFi space, right, and we see tokenization happening, true, like on multiple chains actually, and also on those chains we have NFT marketplaces. Most tokenization is happening as NFTs, like often like in one of those 200s, 721 or 1155. So we do have these marketplaces technically in place. They're just right now too much focus on pictures, where there's actually volume. So the question is, like, it's kind of a chicken and egg, right? The marketplace will only change and shift towards these assets once there's actually demand to trade them. So,
and that's true. But you're so right, because we do not cover the whole value chain. We do not cover the whole value chain. It doesn't matter whether it's an NFT that we're tokenizing in the large scale, or if it's a bond that where we're using the German regulatory solutions. The market is missing, or the real product is missing. One part is always missing. So to your extent, what you said, we need large players. It needs a lot of foresight and only a little braveness to enter the market for a large player. But you need the foresight to build something that is not in an entirely done value chain in the end, in order to solve the chicken and egg problem.
So I think it's going to be a really interesting discussion, because you have totally different knowledge and totally different views on that topic, but now we are kind of stuck with one topic that seems to be important for the market. So, but nevertheless, you said like on every single point or in every chain there's something missing. So if you kind of combine your knowledge, what would you think, or what would be your thoughts on how you can solve the missing parts and what is really missing?
yeah, I think in general what is missing is liquidity depth. So that prevents TradFi from entering the space, the further DeFi space. It's liquidity depth. They can't trade without a huge price impact, right? On top of that, we are missing traditional trading strategies. DeFi is just too young, so they came up with AMMs. Now we see a trend towards order book style DEXs. We see companies, actually like ours, who are building more traditional trading strategies, like basics, TWAP orders, trailing stop orders, stuff like that, right? So these things have to be brought into this multi-chain environment, and once and I'm assuming once DeFi paves a greater way for TradFi to put in more liquidity. It's kind of a chicken egg again, but we see huge business models like interest rate swaps being super successful in DeFi as they are in TradFi. So this is happening, right? It just takes more time. But liquidity depth is one of the reasons. Another thing that's missing is speed. Going from nanoseconds up to seconds, it's difficult, right? Understanding impacts, technological hurdles in that context, this is a topic. And then we have MEV and so many other topics that come alongside that. So I would say fundamentally we have infrastructural problems, speed, standardization, privacy. Market makers don't want to be seen how they redeploy their capital, price impact protected trading, and all of that. So it's like a combination of these things. From my opinion, we're just very, very early still. DeFi is 2 years old. Right?
I would again argue from the regulatory side, the secondary markets, in my view, that's the biggest piece that's missing. I see two options. One is that independent exchanges are going to launch. We have a few examples around the globe, not very liquid, not very many assets. I think the other option is that more and more banks are going to launch marketplaces. We have one example in Switzerland with Swissquote. We see others pop out of the ground. I think this is a big opportunity for banks to offer marketplaces for tokenized securities. real estate, inheritance objects, even auction-based models. The infrastructure is there. This is an attractive new business model for banks. I think this, in my view, is more likely than larger centralized exchanges.
But yeah, I know you can go directly, but then it's a little contradictory to that, to what we want to be, because we don't want to focus on banks and the huge banking system. So, but if now the banks are kind of the solution for the problem.
I mean, look, I think we have a small percentage of people, the crypto natives, that are on DeFi, that have MetaMask. These are the clients that banks have lost already. They probably have a Revolut or an N26 account, but that's it. The rest, the 85%, the normal people on the street, your grandmothers, they're going to stay with the bank. And they want the same solution, the same service, the same security, but with the bank.
Also, maybe to double down on that, like what we are seeing is that all the banks, all of them, are looking into custody. Building POCs are going to offer at least custody, because that is like the closest to their existing business model, where they keep on custody of the user's funds, right? Like they did so far. And I think this is the first important step. So as soon as all the banks support at least that, I think we could have one huge step towards adoption.
And as you said, DeFi is only 2 years old, and we expect shareholder-driven companies to act as fast as a startup, because we sit in this bubble and are waiting for them to come and to come and to come. I would still go with the markets and agree with you. On the other hand, I would disagree that we will see that everyone wants the old traditional banking services. So we launched an initiative, but every consultant in Germany can now install MetaMask and handle tokens. And getting that through our internal technical security processes was quite a hurdle.
So you can install it on your working computer.
On your working computer in
Deloitte.
the Chrome browser as an add-in. And this also opens opportunities to really think a little differently. And if I'm part of the consulting, would be a part of the Big Four. If a Big Four can do it, companies can do it too. And if it's a certain amount of money that we're talking about, I would go with your suggestion. We will see custody in a banking space, but it will become more commodity to really interact with assets on your own. That's what my perspective would be.
I have a little different approach. I would first of all say that you're right, because we have a lack of market opportunities, and liquidity depth is still missing. But I would say a market is always decided with customer demand, and the customer demand just needs to have a better product than before. And I think we're also lacking in the quality of the products, and this is depending on the infrastructure we need to build these products on. I don't want to say it again, but it's already again chicken and egg. But I would say that we need to have the opportunity to build better products, to make them comparable to the traditional capital market products. And if we can offer a cheaper, better and more efficient and trustable product, then the market will change and will accept this product. More players will go into the market, and afterwards we will have the market depth we're expecting. But right now, in a lot of senses and cases, the blockchain is just an excuse for a worse product than on the traditional market before. So we need to bring the efficiencies we all expect to have from the blockchain into the market, and even then we need to fulfill the wishes and to produce these products, and afterwards the institutional players will adopt, and afterwards also the infrastructure providers will adopt. When there is a business case, and the business case is always derived by the customer demand, then there will grow, the market will grow.
That's also maybe to add, like there's a lot of dev tooling missing, or like it's being developed, but it takes more time. Like developing on the blockchain is still pretty hard, and so is building great user experiences. One of the huge topics right now is account abstraction, where we allow to automate transactions for the user. So he only has to sign once, and then things can go their way. This is what they're used to, right? If they do things in a bank, like things are just going their way. And right now it has been just too account-centric, and now account abstraction and network abstraction, so that multi-chain is not even acknowledged by the user. It's just like they don't even care on which chain they are on. Like my long-term perspective is developers going to pick their blockchain like they would pick their database today. with different technical properties, whatever fits their business case. Yeah, but I think this is the bare minimum. It's happening really fast, though. Like, it's happening really fast. Within the next 1.5 years, we're going to see a major change in UX.
Okay, thank you. So yeah, Jens, just out of curiosity, how many people in the company, or if you can say, really used the opportunity to install MetaMask and to really use Web3 tools and applications? Can you, just out of curiosity, can you let us know a little about that?
I would be happy if I could share an actual number because I don't have it yet. But maybe we can find that out for the other panel tomorrow.
Okay, thank you. So we have only 5 minutes left, I think, or maybe only 4 now. So what I've heard, what do you think about if we say like blockchain is one ecosystem and we have now people from different areas, is the collaboration and like how we work together within the ecosystem, is there like a potential to increase and to make it easier, or do you think this is already something that works very well?
From a technical standpoint, so this whole topic, interoperability, is something that is pretty hot. I think the biggest funded startups right now are interoperability protocols, and this interoperability happens on so many levels. So yeah, there's a lot of room. The problem that especially Ethereum and EVM compatible chains are facing is that they haven't agreed on a standard from the get-go. Other larger ecosystems, I'll just name them here, like Polkadot or Cosmos, they have standardized interchain communication from day one, so they're better positioned, but they lack adoption. There where we have adoption, we simply have to catch up on standardization, but this is happening as it scales.
I think on an interpersonal level, it looks a little bit different. We are all working together in a space, partnerships. There's a lot of partnerships, exchange. I like this. It was different in TradFi. Here you get advice from everybody. But I think we need to do more, especially if we want to serve larger institutions, banks. We need to act in consortia, work together to provide the institution with an end-to-end solution. There we still have some legroom. We need to improve, learn more about each other's solution.
I would say that the market itself needs to be bigger and we grow, because in our bubble, I think we all work together quite well and help each other with information or partnerships or something else. From an outside perspective, I would say the market isn't there and we need to work better together, but already also on our individual scales, because we need to make the market more trustworthy, more trustable, more credible. Because from an outside perspective, as you just said, our business models are quite different. If you go to like 90% on the market players on the financial market right now, all we do is something with Bitcoin. So I think in the end it needs more education, it needs more individual scaling, and we need to bring more people into our bubble, because right now in the bubble we're all cooperating and helping each other, but the bubble needs to grow to have some really meaning on the financial market right now.
Okay. Jens, do you have some thoughts on that as well?
I would just agree.
Thank you. So I think because it's already pretty late, I think it's nice to finish in time. So I'm pretty sure everybody of us has heard every panel and discussion today. So is there anything you want to say that has not been said today? So maybe some last thoughts?
The last thought I had just for the last question we had was essentially, I think, let's try to work together and avoid private blockchains and just try to get regulators to agree on that we can interact on public decentralized blockchains. That's what they are made for, right? It kind of defeats the case if we have private blockchains. So this is really something we should talk about, and not just patch the word blockchain on something just to make it hip and trendy, but work towards a world where we have a decentralized finance system.
Thank you. Anything else?
Did anyone say cheers?
Yeah, so thank you so much for having us. Thank you for the really nice and interesting discussion. And I will hand over one last time to Marcel, I guess.